We've got a level of demand right here. Do you see that? Now, with our level of demand opposite, what we can do is that thing hitting, we don't quite have 3-1. So we knew it moved at least 3-1 away. So that gives me the potential for the trade. But when the price actually hit the zone, the opposing level of demand was here. And I wanted to try and get it a little bit lower. Well, look, what could we have done therefore? What could we have done on setting this profit target? Well, we could have took an entry a little bit higher within this zone. So we said, well, look, if I enter at around 111.90, okay, yeah, and I got to stop above here, yeah, great, but it's only about 2.5-1. So what could I have done, guys? I could have entered nearer to the round number. So I could have made my zone a bit tighter. Do you see that? Could have made the zone a bit tighter. And then, bam, hit the profit target just fine. Does that make sense? Yeah? Yeah, that you can see that, you know, the weekly supply I'm going to come into. So you could always make your zone a bit tighter. So when it comes into this, one of the things I like to do is if my opposing levels are narrowing my profit margin, then I don't want to obviously, I want to make sure that I then take a tighter entry. So I'm not prepared to risk quite as much on those areas. Right. Okay. Now, we're going to talk about the trade management as well on this as well. Okay. But I just want to we're just recapping the ideas here. Okay. Now, look, if we take a look at what actually happened, see how this market carried on going much lower, even though the opposing level itself was quite near. Do we all see that? So what could we have done? Okay, well, this is where, if we're going to do some trade management and we're going to maximize our trades, if we want to squeeze more out of our trades, can't just look at one chart. One of the biggest things that we can fall into the trap of doing is micromanaging a trade on a small time frame. So we can use multiple profit targets. And my advice here on this, guys, and something I'd say you could use, and this is for any style of trading, even if you don't use supply and demand even if you don't use supply and demand for your own, you know, your basic trading strategy, you could employ this technique, okay, into using it with other things you're doing as well. So if you're like a moving average trade, like a pullback to a moving average, or you're an old support becomes new resistance and vice versa trader, all of these things are good, but keeping an idea on big picture levels is going to be key. So if we're taking a look on this, would it have been okay to take a profit margin at our demand level, guys, just on that trade chart alone? Just going with that current trend and taking it. Would it have been okay to do it? Would it have been okay to do that? Yeah, of course it would. Absolutely. Not a trick question. Because we didn't know that the market wasn't going to hold this demand area, did we? We never know. And I never ever assume that I know what's going to come next, guys. I always assume that I know nothing. I always assume that I could get it wrong. I always assume that anything can happen. I guess being a married man, I've got into the habit of accepting that, and it works great in my trading as well. Okay, let my wife be right, and she would kind of tell me what's right and what's wrong. So I bring that into the trading as well, you know. But yeah, we don't know when the market's going to rally. So objectively, while that's a good profit target, while that is a good I know some of you guys will relate exactly to what I'm saying as well, guys. Happy wife, happy life. I do try to live by that. It makes my whole world a lot easier. So what could we do, though? What if we wanted to look, well, look, imagine if it does go beyond this level. Yeah. Imagine if it does go beyond this level, where else could it go to? Okay, that's another way to look at this. Now, the way that we would do this is we need a bigger time frame. What we don't want to do is manage our trade on the small time frame. So if you're going to go for your opposing level and take a trade like that, great. But if we want to capture some of these bigger moves, we've got to bring some rules in. And the way to do that is, guys, to see the bigger potential for a trade means we're going to have to look at the bigger charts. So let's slide over to this chart on the right-hand side right now. Now, the chart on the right-hand side is also euro dollar, but you'll see it's euro dollar on a weekly time frame chart. Now, what I'm going to do is I'm going to mark off the key areas of supply and demand. Can you still hear me, guys? I'm just saying that my sound had gone. You still got me, yeah? You guys good? Okay, cool. Okay. So, what I'm now doing is I'm marking off my weekly chart. Now, let me ask you a question. Here's a supply level. Here. Okay. And below us, we have a demand zone. I mean, if you want to just treat this as all one big demand zone, that's perfectly fine. I like there's this little base. You see where this real takeoff happened, this big blue candle at this particular point? If you want to mark off these areas, and again, you don't have to be too kind of, refined on this. Is it really any different? I mean, because it's a supply level on a weekly chart, does it mean the same thing as a supply level on maybe a 2-hour chart? Well, of course. It's all the same thing, but it's likely going to be more reliable because bigger institutions have to trade off of the bigger time frame charts because they're going to have a lot more order inventory that they're going to want to fill. They're going to try and get filled on a lot more trades. And if you want to get filled on a lot more trades, you're going to need a cast of wider net. Okay, got to cast that wider net. So, those bigger time frame levels can become incredibly reliable. I've done some of this bigger time frame stuff with you before when I've done these webinars. It's one of my things that I specialize in. So when I look at a chart, it's all very well having my entries on this 2-hour chart, 1-hour chart, 4-hour, whatever you want to look. But I like to keep an eye on this weekly chart. And the weekly chart to me is probably the most important chart that I use in my Forex trading. Because what I love about the Forex market is when it gets going, it really does pick up its pace. It really does start to move. And to me, it seems that, well, if I'm going to nail a good entry on a small time frame here, so let's name this chart my entry chart. Okay. I could be looking for a 3-to-1 on here. I'm going to make some notes on here. Okay, that's fine. But what about if I want to capture some of these much bigger moves? Who in the room has ever kind of nailed an absolutely fantastic entry like this and then took a nice 3-to-1 or 2-to-1 or whatever off of it, and then they've seen it's like literally just carried on going and sat there and gone, oh my God, I wish I was still on this. Okay? Anyone in the room like, oh man, I nailed that, got out, right? Okay? And just been so annoyed about it. Right, Eugene was just saying, you got a nice trade on the pound dollar, right? Exactly. We've got to use another chart to give us a bigger picture. It's trader's remorse. Isn't it the most annoying thing? And I'll be honest, I've kind of resigned myself to the fact, guys, that you're always going to give something back in a trade. You're always going to, there's always going to be those times when you end at the high. There was a great quote in Reminiscences of a Stock Operator, classic book, where it says, men who can be right are quite common, but men who can be right and sit on their hands are very uncommon. What he's saying, that those, nailing a good entry, you can do it, but sitting the thing out and letting the thing be is a very rare quality. And I agree with this 100%. What I've found is the only way, though, to kind of, I would say, coax myself into training myself to really stick with it, really kind of, sit on my hands and make them numb, is by looking at the bigger charts. So if we look at the chart on the right-hand side, is it really any different? Seeing that, well, if this was a supply level on this right-hand chart, and let's call this our big outlook chart. Let's call this our big outlook chart, yeah? Now, if we were just trading off of our big picture outlook chart, we'd probably say to ourselves, well, if this supply zone, or if you want to call it a pivot high, it doesn't matter if you call it a pivot high, but this pivot high, this supply zone, if this holds, yeah, prices are probably going to go back to their recent pivot low.